You're watching First Trades, and let's go back to the stock of the day. Bandhan Bank. Partha Pratim Sengupta, MD and CEO of the bank, joins us today. Partha, numbers decent for Q1, but what the street didn't like is the weak commentary that you have given for FY27.
Yeah. So let me first tell you that definitely the results have been impressive. Sequentially, we are doing well. And though the Q1 for any financial year is the softer compared to any other quarters, but this time the rate of moderation has been definitely much, much better compared to the Q4. We have made good PAT. We have reduced our credit costs. The EB book, there is a substantial reduction in the gross slippages. Now, why the change in guidance? You see, the guidance we have given was when just 1 month after I joined, that is somewhere between December, January 24, 25. And at that time, we were hopeful that the microfinance segment or the EEB segment would be as remunerative as has been in the past. This bank with a very strong EEB book has shown an RoA of 2.5%. But suddenly, as you all know, that the over-leveraging problems crippled this particular segment. Almost all the lenders were in big soup. We've performed much better than the MFI industry, definitely much, much better. But still, our NIM got impacted. Our credit cost was high. We made a lot of revamping. We changed the models and have done all our internal corrections. At one point of time, we thought that probably from December 24 quarter, the EB would be performing back to its previous time. But unfortunately, it took a longer period by another 1 year. And we can see that the corrections started happening from November 25. So that is the third quarter. But we still maintain the guidance that we thought that, yes, this book will definitely now go up and will be contributing in the same way as it had been doing before. Although not many guardrails have been imposed by the SROs, which we are meticulously following, we have also changed our models. The fact that when we look at this quarter, two major uncertainties are there. Definitely the first one is the continuing West Asia crisis, which may lead to energy crisis. We are not aware of it, though the country is managing extremely well. But the uncertainty is still remaining. We thought that with the treaty being signed, probably this would be over. But now this sector, particularly this microfinance sector, no other commercial banks have this much of exposure what we have. We have almost 1/3. So even up to a strategy which earlier we were having almost 60-70%, we have reduced it. We are having 1/3 of our asset book in this particular center for the in segment. So this segment is most vulnerable to any external crisis. So while we have corrected the internal systems, we have improved the credit costs, we have improved the gross slippages, but we cannot be over-aggressive as we have been in the past, and just to get more profits, we can't be more aggressive. We have to be a little bit cautious. The growth has to be with caution. The growth has to be there. It has to be with caution.
So, now, Mr. Sengupta, what will the growth number be?
So EB, we have kept a range of 5 to 10%, anything. So if with a cautious growth, we will be going with 5%. If we find that, okay, this is not going to impact the industry for that year as a whole, the vulnerabilities are not, we may grow up to 10%. That I have told very clearly. Now we have reworked the numbers with this amount of growth for that year. We went to an RoA level of 0.2 in September, hardly 6 months back. We are, after 9 months, we have 6 months, we reached to 1.10. And this time with some extraordinary costs, we maintained our RoA at 1. If those extraordinary costs should not have happened, mainly due to the new Wage Act, we would have maintained at 1.1. But reaching all the promises that we have made, that we will be giving an ROA of 1.6 and 1.8, was not happening under any calculation unless we go over aggressive on this segment, which we do not want. So it was a conscious call. At one, either we have to show that we have not performed at the exit of Q4, or you have to take a call with the investors and tell them the real picture, be transparent to them, be clear to them. We have chosen the path. So
100%. Appreciate that, sir. Mr. Sengupta, the other two concerns. I'll start with the first one. Margins. You've also, brought down the margin guidance from what you were penciling in. What's changed last quarter versus this one?
So obviously, you see this, the overall effect. You have seen that the rate has not gone up, although there is an inflationary trend in the market. But definitely, I would say the repo rate has not gone up. But it does not mean that the deposits cost or the cost of funds remain the same. There is an inflationary pressure or in the economy, and for which you see that the banks, even some of the bigger banks, have also raised their deposit rates. For us, small banks and who are in the market just for 11 years, definitely this cost of funds is one of the most important thing, how we manage it. So as a strategy, we have reduced our dependence on bulk deposits, but we find that even we reduced our cost in our share in the bulk deposits, we have to increase the rates in the retail deposits to remain in the competition. So the cost of funds is definitely one thing we expected last year when, if you remember that when RBI cut the repo rate, we said that we are giving the immediate effect to our borrowers. That has to be at real-time basis. But the effect on the depositors will come a year later because most of the term deposits were going to mature in Q4, Q1 of last financial year, Q1 of this financial year. We got that positive effect in Q4. We got that positive effect in Q1. But going by the trend in the cost of funds when we compare Q on Q, I think this benefit is probably not going to be available to us from Q2 onwards. So what we had expected that we will get this benefit right up to Q4 of the current financial year is not happening. It is because of the market, the cost of funds, the pressure. Even you have seen that in the month of March, the bulk deposits rates crossed 8% also. For that, even large banks also borrowed at that rate, more than 8%. So we have to be very realistic. The only thing is that when we calculated and we react with our ROA, we thought that, yes, we must be transparent to the investors. We must tell them the true story. The investors might have reacted a little bit negatively at this point of time, but I'm quite hopeful that they will understand that the bank has taken a pragmatic decision. Maybe the information could have been shifted 1 quarter later or 1 quarter earlier. But definitely we have been transparent for that year. And going forward, you will only see improvements. You see, there are sequential improvements in our balance sheet, and that I can assure you.
No, point taken, Mr. Sengupta. And again, thank you for being candid. The last piece is with regard to credit costs. That number hasn't come down meaningfully for you. There's been slippages and your attempt to ensure that your NPA ratios continue to remain contained, which is the correct way, right? But give us a sense as to what's playing out. You suggested that QOQ things are improving from a slippage perspective, clearly. And what you also suggested on the con call is that stage 2, stage 3 is not where the stress seems to be flowing through. It's only a stage 1 problem at this point of time. Could you give us a sense as to what's playing out and what's giving you the confidence?
Yeah, so let me just tell you that this is probably sequential. We look Q4 to Q1. This is the quarter where we have actually reduced our slippages in the EEB segment. That is a great thing, you see, because the highest provisions come from the EEB segment because these are unsecured loans for that. And we have been able to reduce it. You see, there is a marginal increase in the gross slippages compared to Q4, this Q1, but there has been a reduction in the overall net slippages because our cash recovery was much more. This has been due to one ARC sale we have made, and also the other cash recoveries plus other NPA management decisions that we have taken it for that. Overall, I can say the credit cost has come down from 2 to 1.8. And sequentially, it is coming down. You see, we at one point of time, we had a credit cost of 4.5. From there, we are now coming at 1.8. And I can say that if this continues internally, and unless there are some external factors beyond our control, this improvement will definitely go on for that year. So the gross NPA, you see, sequentially we were improving. We at one point of time we were 5%. We came down to 3.8%, then to 3.3%, then again 3.1%. So it is quarter by quarter the sequential improvements are happening. So internally we have taken the corrective steps. We are only worried that the external factors do not become an impediment for our growth. That is the only thing. So the thing is that if you want to give the desired ROE level of 1.6 to 1.8, you have to be over aggressive in the EV segment, because your secured books, because of the intense competition, will never give that level of ROA for that. So, but we don't want to be too much aggressive on this EV book. As I've told you, what we had thought that probably this EV segment will continue on the same basis. When I joined, yes, definitely we thought that it will be improving, but it took a long time, almost a year, to actually the market getting corrected. And now we are having a growth with a rightful watch. That much I can say. So it is just a clear and transparent message to my investors.
Partha, it was a pleasure talking to you, and good to hear from you about being more open about and transparent about the communication to the shareholders. And I hope they understand.
Challenge what Bandhan Bank face is probably we are the only universal bank which has evolved from a microfinance institution. So this challenge is not being faced by the other universal banks. So that point also you have to take into consideration.
Understood. And I'm sure the investors will take that into account, and the kind of transparency that you're bringing in communicating to them. Thank you for joining us today.
Thank you.